Imagine getting a check in the mail for your totaled car, thinking everything is finally settled. And then a week later, the same insurance company calls you back and says, "Actually, we've changed our minds. We're not paying for this. Your car is already gone. The money is already spent." And now they're telling you it was your fault all along. That is exactly what happened to one driver, and it raises some serious questions about how insurance companies actually operate, and what you can do to protect yourself when they try to pull a move like this. Let's back up and talk about why this kind of situation even matters. Car accidents are already stressful enough on their own. You're dealing with the shock of the crash, possible injuries, damage to your vehicle, and the anxiety of figuring out how you're going to get around. The last thing you need on top of all of that is an insurance company playing games with your claim. But here's the uncomfortable truth. This happens more often than most people realize. Insurance companies are businesses. Their goal is to minimize what they pay out. And sometimes that means they will reverse course on a claim even after they've already paid you, especially if the other driver changes their story. The stakes here are enormous. We're not talking about a minor fender bender. We're talking about a car that was declared a total loss. That means the insurance company already determined the vehicle wasn't worth repairing. They paid out its market value and had it hauled off to a salvage yard. Once that car is gone, it's gone. You can't bring it back to dispute damage. You can't have an independent mechanic look at it. The physical evidence has essentially been destroyed. So when the other driver decided to backtrack and change their story, the person who got hit was left in an incredibly difficult position, holding money that was already paid out for a car that no longer exists, while the insurance company suddenly claims they made a mistake. Here's how the whole thing unfolded. A driver was traveling through an intersection when the car next to them began merging into their lane. The other driver didn't check their blind spot, didn't signal, and made contact with the car. A classic lane merge collision. Both drivers pulled over, as you're supposed to do. And here's where it gets interesting. The other driver admitted fault right there on the spot. In the moment, face to face, he acknowledged that he was the one who crossed into the other lane and caused the collision. The two drivers exchanged information and agreed to handle things through insurance. That's the responsible thing to do. No handshake deal, no cash exchange. Go through the proper channels. The at-fault driver's insurance company, a major national carrier, got involved and began processing the claim. Their adjuster assessed the vehicle, reviewed the damage, and made an official determination. The car was a total loss. That's not a small decision. Declaring a car totaled means the insurance company officially accepted liability, valued the vehicle, and agreed to compensate the driver for it. They sent the payment. They arranged for the car to be picked up and taken to a salvage yard. From the perspective of the driver who got hit, the case was closed. They had been made whole, or at least as whole as you can be after losing your car. They had the payout, the car was gone. They could move on and start looking for a replacement vehicle. Then the phone rang. 1 week after all of this, after the payment, after the car was hauled away, the insurance company called with a stunning reversal. They were now denying responsibility for the claim. The reason? The other driver had apparently changed his story entirely. Instead of admitting he merged into the other lane, he was now telling his insurance company that the other driver failed to maintain their lane. In other words, he flipped the narrative completely. He went from "I caused this accident" to "actually it was the other person's fault." And the insurance company, his insurance company, decided to take his word for it. Now think about that for a second. This insurance carrier had already gone through the claims process. They had already sent an adjuster. They had already declared the vehicle a total loss. They had already issued a payment. They had already arranged to have the car removed from the equation. And then, 1 week later, based entirely on the other driver changing his story, they called back and said they were no longer accepting responsibility. This is where things get legally and ethically murky. Can an insurance company actually do this? Technically, in some circumstances, yes, they can attempt to. Insurance companies can reopen claims or dispute settlements if they believe there's been fraud or a significant change in information. But there's a big difference between having a legitimate reason to reopen a claim and simply reversing course because the policyholder called in with a new version of events. The key issue here is whether a formal settlement agreement was signed. In many states, once an insurance company issues payment and the claimant accepts it, that constitutes a settlement, and settlements are legally binding. You can't just undo a settlement because your policyholder decided to change their story a week later. What makes this situation even more infuriating is the destruction of evidence. The car has been taken to a salvage yard. The physical evidence of exactly how and where the damage occurred, evidence that could help reconstruct the accident and prove which car crossed into which lane, is essentially gone. And who arranged for that car to be taken away? The same insurance company that is now disputing the claim. That's a significant issue. If it ever came to litigation, a good attorney would have a field day with that fact. There are a few things working in favor of the driver who got hit here. First, there was a verbal admission of fault at the scene. If anyone else witnessed that conversation, a passenger, a bystander, someone who pulled over, that testimony becomes valuable. Second, there's the police report. If law enforcement responded to the accident, their report would include observations about the scene, the damage patterns, and any statements made by the drivers. Third, if there were any traffic cameras, dashcam footage, or witnesses nearby, that evidence could help establish the truth of what happened. Fourth, the insurance company's own claims process created a paper trail. The adjuster's report, the total loss determination, the payment documentation, all of that reflects the company's initial acceptance of liability. So what should someone do when this happens to them? The most important step is to get an attorney involved immediately. Not a general practice lawyer, a personal injury or insurance bad faith attorney. Many of them work on contingency, meaning they don't get paid unless you win, so there's no upfront cost. Insurance bad faith is a real legal claim. If an insurance company accepts a claim, processes it, pays you out, and then arbitrarily reverses course without legitimate new evidence, that could constitute bad faith. And in many states, bad faith claims allow you to sue for damages beyond just the original claim amount. Second, document everything. Save every piece of communication you've had with the insurance company. Every phone call. Write down the date, the time, the name of the representative, and exactly what was said. If they send you anything in writing, keep it. If you have text messages or any form of written communication from the other driver admitting fault at the scene, screenshot it immediately and back it up. Third, file a complaint with your state's Department of Insurance. Every state has a regulatory body that oversees insurance companies. If a company is behaving improperly and reversing a settled claim based on nothing more than a policyholder's changed story certainly qualifies, you have the right to file a formal complaint. These agencies take complaints seriously because insurance companies operate under state licenses, and those licenses can be affected by patterns of bad behavior. Fourth, contact your own insurance company. Even if the other driver was clearly at fault, your own insurer may be able to step in and fight on your behalf through a process called subrogation. They may also be able to provide legal support or coverage while the dispute plays out. And finally, this is a lesson for everyone watching. Always request a police report at the scene of an accident. Always take photos of the damage and the position of both vehicles before anyone moves them. And if the other driver says anything that amounts to an admission of fault, get it in writing immediately. Ask them to send you a text message. Ask them to confirm in front of a witness. Because as this story shows, what someone says at the scene and what they tell their insurance company later can be two completely different things. The driver in this story did a lot of things right. They involved the proper authorities. They went through insurance. They didn't accept a cash deal. But what they didn't have was a written record of that admission of fault. And that single gap gave the other driver just enough room to change his story. If this happened to you, if an insurance company paid you out and then called back trying to reverse the claim, do not accept it quietly. Do not assume they have the final word. Call an insurance bad faith attorney. File a complaint with your state regulator. Push back hard because you have more options than they want you to think you do. Insurance companies count on people not knowing their rights. Don't be that person. If you found this video helpful, hit subscribe because we cover real insurance situations just like this one every week. The kind of stuff that can save you thousands of dollars when you need it most.